One of the really difficult things about being a regulator is you're kind of writing rules now, and there's a process that is gone through, and it takes a lot of time. By the time the rules come in, it maybe is a year, 2 years, possibly even 5 years after you've written the rules. So you've got to kind of predict where the space is going to be in the future by the time the rules come in.
Giles, thank you very much for joining me on the podcast.
Well, thanks for having me, Jordan. Appreciate it.
Yeah, it's good to speak with you. We spoke last week for the first time, and here we are. You're on the podcast.
I'm looking forward to some difficult questions. Hopefully, I'll answer them for you.
Great. So for everyone listening, can you give a little bit of a background and a little bit of a context around what you do and your current role as well?
Sure. So I probably a career regulator and someone that has worked in regulation for too long, actually. You'll see the grey hair here. And that probably is about 20 years or so that I spent in regulation, mainly Europe. And my kind of background has been more the investment industry. I spent several years at the regulator in the UK, and then about 15 years or so working in the investment industry, and more recently crypto, Bitcoin. So I've done a lot of regulation from various different angles, I think is the way I'd sum that up.
What made you go into regulation?
I hadn't some grand master plan and hadn't thought I wanted to be a regulator when I was growing up at school or anything like that. I think it was kind of fell into this job in many respects. I did a kind of finance degree, and that was interesting to me, and it was interesting to me to understand how kind of these things worked and how sort of policy was made and how regulation was made. So a bit more of an accident than maybe some master plan, I think.
All right, well, let's dive into your journey into, because you mentioned working more in the crypto space and like overall in general. What's been your journey into Bitcoin and crypto? How did you get into them?
Yeah, I've been working in the investment space for quite a few years. I think post the 2008 crisis, I worked a lot on the regulation of alternative investments, sort of coming into regulation, that industry. And I noticed crypto and Bitcoin kind of back then. Like most people, I didn't really know a lot about it. I kind of tried to learn a bit, and actually I used to listen to the Bitcoin Standard podcast a long time ago, and you and Jim I think helped me probably in the early days, just sort of understanding some of the core aspects. And as I became more interested in this, I think I saw maybe the potential here to really do something interesting in the future in terms of, kind of bringing the financial system that we know now kind of into the 21st century and making it sort of fit for purpose in what we're living in, which is a digital age. And that kind of potential that having brought sort of an industry into regulation, and then seeing that the Bitcoin space and the crypto space was kind of going to go the same way as regulators were becoming more interested in this. It was sort of the next thing for me, and it was really exciting and really an interesting space to get to know and have the opportunity to work in.
That's so funny. You used to listen back in the day.
I did from was it Dundee? You used to
yeah.
No, there you go. I didn't even know where that was, Jordan. I'll be honest with you. I went to Edinburgh, Scotland, Edinburgh and Glasgow in Scotland, but it was great. And just I think the way in which you sort of built the knowledge up and talked about this in a real life context and sort of what it meant, for real people, really helped me to begin to think about the use cases and the potential of of this space.
Yeah, and like that's how we started the podcast. It was like we're dumb, and we're asking those questions and like bringing on experts to actually ask those questions too and bounce off. And it's not like acting like the hosts are the expert, because I never want to think of myself as that. It's all like learning off of each other. And I think back in the day it was I think there's probably some comedy moments because Jim
many
yeah All right. Okay. Back to this. We are. So you said you spent. I'm going to take us down like the regulation side of things first, and like the FCA. So very specific to the UK, because you spent, I think, over 6 years there.
That's right.
How do, from your perspective, how does the FCA think about Bitcoin and crypto? And also, adding on to that, is there do they distinguish between the two, or do they group them all together?
Yeah, so I spent several years in a mixture of supervision. So that's the part of the FCA that goes out and inspects companies and does work externally, and also policy. So actually writing the rules and the framework to govern and regulate this. I mean, the FCA sort of thinks about this and has thought about this as just another investment product. And you'll have seen that strongly through some of the warnings that they've put out around people should expect to lose all their money. Some of the ways in which they're describing this as an investment product. So that's that sort of thought process is, this is an investment. What are the risks? What are the investor protection issues? But actually, we'll come on and talk a bit more about this, but sort of what are the opportunities here as well? I don't think the FCA has drawn a big distinction between sort of different crypto assets. So between, let's say, Bitcoin and Ethereum, for example, they're sort of all in the crypto asset box. What we have seen is, I think some thinking around how you might regulate different parts of this space. So, particularly DeFi versus CeFi, for instance, and then how you deal with certain activities like, I don't know, staking for Ethereum, for instance. But there hasn't been a sort of clear distinction where the FCA has said, well, Bitcoin should be treated like this, and, other crypto assets should sort of be treated like that. They're all sort of, at the moment, at least, put in this investment kind of bucket, labeled as high risk investments or restricted investments. There's lots of different pieces to that. And so you've seen, for example, the marketing rules, the financial promotion rules in the UK, that things like the calling off periods and all of that sort of applied across the space, not without any differentiation between, different crypto assets.
Do you think it'll change going forward, like that distinction? Just because, like, if we look over to America, and there is still a very grey area, because sometimes they're throwing Ethereum in as a commodity, but people think it should be a security, and Bitcoin also has the strategic Bitcoin reserve.
Yes.
But then you've also got the cryptocurrency stockpile, which the stockpile can be sold, but then the reserve can't be sold. So for me, there's a distinction there between the two of them. But then also saying that there is also it's still not clear in America as well. Where do you think we will go? What path?
I think there will be a distinction drawn kind of over time. And there's two drivers to that. Firstly, I think the FCA, continuing to understand how this space is evolving, and sort of unfairly, people think that regulators are kind of machines. They have all of the answers, or they don't have all the answers, and it's just a sort of compute process. I mean, this is a group of people, like any organization, that is got various objectives to achieve, is trying to understand the industry that it's regulating. And so there is a sort of process there, and that's for the industry also to help, I think, the FCA and the team sort of understand this. The other component of this is the maturity of the market, and also the maturity of investors understanding about this space as well. And I think as that evolves, we'll begin to see maybe some differentiation here in how we should be thinking about this, how we should be thinking about regulation, and dare I say, possibly like a bit more sensitivity about, actually, we shouldn't be regulating DeFi in a particular way compared to, let's say, CeFi. We should be more sensitive about how we want to try and see this space grow, and more sensitive about the sort of risks that we're trying to protect against, the harms, if you like, from regulation. So this is it's a process, it's a journey. I don't think anybody's got all of the answers like now, But I think we're getting to a point now where we're beginning to see a bit of differentiation coming through in some of the approaches. So that's a great thing, right? That's something that we can all support and work with the regulators, to try and make happen. Definitely.
Yeah, and like you talked about process there, and I want to dig into that, and like maybe like a little bit behind the scenes, because you've worked inside the FCA, and like to give me and people listening like context of like what is the process that they have to go through, because from my side, like what we see is so the consultations coming out, for example.
That's right. Yeah.
So the recent one is about the ETN coming out, and people can give feedback and take part in these consultations. But then what's happening behind the scenes?
Yeah. Okay. So you're seeing the end of quite a long process there in the consultation paper. That hasn't just been written by someone who came in on a Monday morning, decided they're going to write a consultation on removing the ban for retail access to crypto exchange traded notes, and then they published it in the afternoon. There is a whole kind of process that's gone on there. The starting point from the FCA is, what are their statutory objectives? Like, they exist because there was a law passed, Financial Services Markets Act, that created the regulator and said, ye shall do this, this and this. And one of those do this, this and this is protect investors. So that's the kind of starting point for them, is that's our kind of statutory objective. That's the outcome we're looking to get to. How do we get to that? And there's a sort of process of working back from that and figuring out what the regulatory framework should look like. Now, that process involves, people that work in this space like me in the policy space, engaging with the FCA. We attend roundtables, we have discussions, we submit lots of additional materials and information and research, etc. And that kind of process, then the FCA goes through and says, well, what are the outcomes we're seeking here, and how can we get there? One of the really difficult things about being a regulator is you're kind of writing rules now, and there's a process that is gone through, and it takes a lot of time. By the time the rules come in, it maybe is a year, 2 years, possibly even 5 years after you've written the rules. So you've got to kind of predict where the space is going to be in the future. By the time the rules come in, you've got to take lots of kind of things, and you've also got lots of competing priorities. You've got the government saying to you, well, you're an independent regulator, but we want the UK to be a fintech hub. We want it to be an AI hub. We want it to be a crypto hub, whatever it may be. And then you've got your statutory objectives. So there's lots of sort of pushing and pulling on the FCA in terms of the objectives it's trying to get to. Plus, it's trying to predict the future. And that's why this process is so important, where you're suggesting ways in which those policy outcomes can be achieved. You're getting feedback from the industry, and I'd encourage everybody, to read these papers, to comment on them. The FCA actually wants to know whether what they're trying to achieve is achievable, and the approach they're trying to achieve that through, is that going to work? Is it going to result in unintended consequences? They actually want to know that. Maybe that doesn't come across sometimes in the consultations, but the worst thing for a regulator is to miss your target. We can debate whether the target or the outcome is the right one, but the worst thing is to write a rule that doesn't work in achieving the outcome that you've decided you want to achieve.
Have we kind of seen that recently in the UK with around the digital pound, and them essentially, or the building of the digital pound has now been put into question whether it should be happening or not, because one of the things that was said was because of pushback against this, because it's viewed as the central bank digital currency, which a lot of people don't want. So is that an example of what we're kind of seeing?
Yeah, so that's the Bank of England that's been working predominantly on digital pounds for the CBDC. Yeah, the Bank of England has published a lot of papers on this, and actually a lot of discussion papers where they're not saying we definitely want to do this, or this is the way that we want to do this. It's, should we? How would this look? What are the limits on this? How would it function? The other sort of significant piece of the CBDC and digital pound debates, of course, been stablecoins. And we've seen Genius, for example, in the US, and significant regulatory developments, there. Because that's the kind of the other side from that we've got the private money, if you like, in the stablecoin space, and then we've got sovereign, bank money with the CBDC. What is the future kind of landscape that we want in the UK for that? And there'll be people listening to this with very strong views, kind of either side of that. That actually the stablecoin private money angle is the way to go, but no, others will say no. Okay, digital pound CBDC work. So how do we kind of reconcile that? What's the future landscape look like? How does this work for payments? All of those kind of questions. So I'd sort of not talk about this as pushback, but actually, these are incredibly useful bits of feedback that the Bank of England and others are getting in kind of trying to figure out how that future landscape kind of looks like, and where do we want to kind of get to as a country with all of that. So I think that's only a good thing, and that sort of validates the point that it is valuable. Regulators want this feedback to allow them to sort of shape these proposals going forward.
Yeah, and sorry, I'm getting so many questions coming to my head. See these round tables, like that is happening during these consultations. Let's go back to regulator, not Bank of England. Who's sitting at these round tables? Just thinking of, so if there's one related to Bitcoin and cryptocurrency, what type of people are sitting at these round tables?
Yeah. So the FCA wants to get the broadest possible coverage of stakeholders in these roundtables. So typically you will have, people working for sort of industry associations, trade associations. So that's a very efficient way through sort of one channel that the FCA can get a broad coverage of stakeholder views. Maybe some companies operating in this space as well. But they also kind of want a real diversity of kind of participants. So, people that are providing services to the industry, or even lawyers or consulting firms or associations, because that's the whole kind of ecosystem we're talking about here. And they want differences of view. They want people saying, actually, this is a good idea, or no, this is a bad idea, because that allows the SEO to kind of shape the proposals. What's presented in those discussions is some kind of quite early stage thinking. And then you get an evolution of that kind of process. And you'll see the FCA talk about these, this engagement with the industry, with the associations, or with other people in this space in the consultation papers. It'll be one line saying we've engaged, but actually that could represent, 10 discussions that they've had over a kind of 2-year period. But you kind of only see the output kind of that. So that's the value of having some of these kind of groups. We've got things like Bitcoin Policy UK, for example. Sort of that's a really efficient way that the FCA can get a wide range of different views from for people that are going to be impacted by what they're proposing. Yeah,
and for Bitcoin, like Bitcoin Policy UK are doing amazing work on that side of things, to be that voice. So one of my questions is like, why does the FCA? So for context, I put a post out probably 3 weeks ago that was showing the devaluation of the pound from 1970 to 2025, and it's gone down 95%. And then also, if you look from 2020 to 2005, the purchasing power of it has lost 21%. But then, friend, my question is, why does the FCA tell investors that they should be expected to lose all of their money when holding it in the pound arguably does do that? Because I see this everywhere, and this is the banners that all the exchanges have to put on.
Yeah, there's a kind of financial education issue here as well. You're talking about, purchasing power, so we're talking about inflation and all that, versus, let's say, putting money in an investment product. The FCA, I think, typically has assumed through actually quite a lot of research that, investors have been thinking about Bitcoin as a type of investment product. That's not always the case, okay? But I think from a mainstream kind of investor perspective, and I think that's why, coming back to the FCA's investor protection objective here, they've sort of taken or developed that narrative and said, actually, if you're thinking about this as another type of investment, there are some higher risks for certain crypto investments that your crypto assets that you should be thinking about. And therefore you should expect the value, as in the fiat value effectively of your Bitcoin or your crypto, that could reduce and actually go to zero. That's a pretty different, that's a different point to the point you're making, which is around, what's the investment growth potential, I think, net inflation of holding different assets over a period of time. And that is also incredibly important from an investment point of view. It's not just about what you hold, it's actually, what's the opportunity of cost of you holding something versus kind of something else. And so, the FCA is trying there, I think, as part of a broader investment education program to, raise the standard of financial literacy and understanding. What we're seeing quite narrowly on the crypto space is a specific sort of messaging because of the way I think the FCA understands that many investors are thinking about Bitcoin investments versus, let's say, holding stocks or bonds or putting money in a fixed rate bond in a deposit account in a bank. So that's kind of, I think, the approach they've taken. I would hope over time that we can mature that messaging. We can continue to help investors understand this, and that's kind of on all of us to try and support that. And to bring in some of the other more important aspects, actually, as you were just saying about actually what does this mean for your future wealth and the future opportunities you're going to have, net inflation, because it's not, there's no point in thinking about this gross inflation because you want to buy things in the future with the wealth you accumulate. So that's a journey certainly for the FCA and certainly for us to, as in this space, to continue to educate investors on.
Yeah, actually, like thinking about it, like, it almost feels like a placeholder as they're figuring it out in the background. Or this is how I'm kind of seeing it, as like a placeholder as they're figuring out because they don't necessarily distinguish between Bitcoin and crypto. And like, there's a lot of scams. Like that's an important thing. So yeah, I guess I was just coming from a Bitcoin standpoint, but these are plastered everywhere, all over crypto exchanges. And so yeah, okay, that does make a lot more sense.
If you've got the risk warning on every kind of crypto exchange, you try and get to in the UK, it's high risk investment, take 2 minutes to learn more. And that's a kind of useful prompt for an investor that wants to understand. Maybe you don't, right? Maybe I want to buy this. This is getting in my way. I want to just carry on. But actually, somewhere it might just prompt someone to just understand a bit more about what they're doing, and that can only be a good thing, right?
So this comes up quite a lot, and it's around gambling and Bitcoin, and because it's so easy in the UK to spin up a gambling account and just bet, or go into a shop and buy a scratch card. It's very easy for someone to do that. I'm not sure on the minimum age now what it is. I'm guessing it must be when I was growing up, I think it was 16 for scratch cards. So on my 16th birthday, this is the culture. This is unfortunately the culture.
Did you win, Jordan, when you bought your birthday?
I think I might have won like £2.
Okay, congratulations. Yeah.
So then I spent that £2 and went back and got another one, and then I lost it.
Okay.
But this was it. Like, I remember going on my 16th birthday and buying a scratch card, and then I'm hoping it's 18 for the rest of it. I'm not sure what it is, but it's so easy. I want to make the point that it's so easy for people to gamble and put money onto these, and just that's super speculative. Like, and the house always wins. So why is it so Bitcoin's treated a lot more harshly than this. It is the hoops you have to go through to actually put your money into an asset is actually very, very difficult. And that's what puts people off, I think, is the friction of it, which is currently created mostly or largely by the regulators, the enforcement that's been put on these exchanges.
Sure. Yep.
What's your views on all of this?
So I hate drawing a comparison between crypto and gambling. I think that's quite an unhelpful link, but I understand the reason for your kind of question, because I think they're fundamentally different things here. I think this is a function largely of where we are in the regulatory cycle. We've had quite a lot of experience, I think, in the UK of regulating gambling, and have got to, a place at least, which I think, based on that experience, sort of we've come out at. I think we're still developing that approach for crypto. And what has happened, I think, is the FCA has maybe, consistent with its sort of investors should expect to lose all of their investments, etc., gone and, put in place an initial sort of framework, and some of the frictions you're describing, the 24-hour cooling off period, I think is probably the main one, there. That's been put in place. Now, we are seeing the development of a more comprehensive framework. And the question for me is then, does that mean that you need to continue to regulate in the way that you are at the moment? Or actually, can we be a bit more sensitive here to what we're trying to protect against? What we're trying to protect against here, I think, is investors making investments and actually gambling. So this is where the commonality is, and not understanding the risks of doing that, or not understanding what they're getting into. And if we can get to a place where investors do understand that and are comfortable with the risks, then you begin to, I think, see a bit more of an equilibrium between perhaps some of the way in which some of the things that have been regulated for quite a long time versus crypto, which is, we're just continuing to sort of develop that framework. So for me, this is a function of kind of where we are, not the sort of landing point that we'll have for the next 20 years or anything like that. I don't believe that at all. And I think we'll see quite a lot of development in that space. The crypto ETN consultation is a great example of where we're already beginning to see, I think, some more sensitive regulation coming through, assuming the FCA kind of adopts that. And that I think is a function of, as I say, maturity of market, maturity of understanding of investors in the risks and how some of these and how this space sort of works.
Are we having to see the sorry, this is like loads of just questions around the regulator, and because I'm super interested just to find out more about it. But like, are we having? And I realize that you also don't work there currently, but you've got all that experience. And do you think we're having to see policy regulation speed up and really keep up? Because you're saying like there's these consultations go on for years prior to us actually seeing them, but the world is moving faster than it ever has with the advance of technology, AI, Bitcoin, the whole crypto market. Now it feels like the regulator needs to be moving a lot faster than they currently are. Is that a thing internally? Do you think they'll be looking at?
Oh, 100%. So there's two pieces to this. It's the regulator being more dynamic, if I can use that expression, in terms of how they're thinking about the space, but also the rules. Like, this space moves so quickly. Writing a prescriptive rule now, it's going to be out of date in 6 months or a year. Or worse still, it'll start creating unintended consequences because the space has moved on. So that's about kind of how you are thinking about regulation. Do you think about, do I want a really prescriptive rule that says an investor's got to jump through hoop X, Y, and Z, or do I want a more outcomes-based or sort of principles-based? So actually, where we want to get to is an investor understands the risks that they're taking, but there might be lots of different ways that we can kind of achieve that outcome. And that's the way you you kind of future proof the regulatory framework. So it's not just the regulator kind of moving at a different pace. It's the way in which you're writing the rules and how they're dealing with this space moving and evolving so quickly. Because the worst outcome is we write a rule now that kind of works, and in a year's time doesn't, and actually might result in harm or poor outcomes for investors. And then how do we kind of quickly evolve that? So yeah, there's lots of kind of pieces of that is well understood, I think, within the FCA. It's just how do we do that, I think, is the challenge.
Yeah. And like moving on to the ETFs, because that's it's a huge talking point for people in the UK, because people who are into Bitcoin in the UK a lot of them will have money tied up in pension pots, in SIPs, in ISAs, in other pensions, but they can't access a spot Bitcoin ETF here in the UK. And that has pushed a lot of people towards going into proxies. So previously it was MicroStrategy was the main one that people were going, or Strategy now, which arguably, by the FCA putting this ban on investing in these products, on the ETFs, has pushed investors towards riskier products, like MSTR. What's the blocker in all of this to more like Bitcoin friendly regulation, but also unbanning the ETFs, because it's very unusual that we've still got this, I think, or maybe it's not.
Well, so this is not just an issue for the UK. I mean, actually across Europe, we've got the same thing where it's actually pretty difficult to offer swap Bitcoin ETFs to retail investors. There's a couple of big differences, I think, between the US and Europe. Certainly in the UK, the US got a lot more history, I think, of individual investors kind of becoming comfortable with investments that are not just putting their money in a bank, in a deposit account. And so we see quite a big difference, I think, between the industries. It was massive for, I think, the US to really democratize access to spot Bitcoin ETFs, and then obviously Ethereum as well, ETH now, which is great. I think the crypto ETN consultation is the first step in that sort of policy journey here. And I think it's the FCA becoming comfortable that retail investors are able to understand what they're getting into and understand the risks that are associated with that. But I agree with you that there are lots of kind of other ways that investors are going to get access to this. And I think the worst outcome, certainly for the FCA, is kind of a framework that maybe incentivizes or encourages investors to actually go and invest outside the UK. And perhaps they're not going to benefit from, the protections are going to be more exposed to maybe the risk of scams or financial crime or whatever it may be. So there's a kind of balance here, I think, to say, is the market matured enough? Are we comfortable that investors are understanding, the risks that they're exposed to? And then maybe we can begin to, look at some of the, for example, a spot Bitcoin ETF in the UK. Europe is also, there was a consultation that the European regulator did a few months ago on accessation of ETFs on what's called UCITS funds to crypto. So there's a lot of kind of policy discussion here. This won't happen tomorrow just because of the way I think the policy discussion's going. But I'm really optimistic and encouraged, particularly with the ETN consultation, that we're beginning to see a positive direction of travel here. And I think we're beginning to see regulators kind of understand and think about the risk that you just described, which was, actually we want to provide a sort of convenient, well-regulated, efficient way in which investors can get access to Bitcoin and actually more generally kind of to crypto as well.
How do you see the process going from here? Of we've seen the consultation with the ETNs, which was big news around that, and assuming that that's likely going to happen. What do you see
Yeah.
to then getting to the end goal of having the ETFs opened up, because just having that then opens up a lot more in the UK, and it's a sign that the UK is becoming a little bit more friendly towards the space.
Yeah, I think the FCA should look at this a bit more holistically, actually, and say, kind of, what are the opportunities here for retail investors to get access to this across a range of different products that allow an investor to build wealth over time. So pensions, kind of been a traditional vehicle for that. Though we're seeing, I think, people using other vehicles, even in a traditional, in a kind of TradFi sense here, but actually, what does a pension, what does pension exposure to Bitcoin look like through a SIP, or actually what is ISA exposure through an individual savings account? Should that be through an ETF? Should it be through a different type of fund? There are actually other funds here that are providing a broader crypto market exposure. So I think the wrong answer would be to kind of narrowly look at one product. And I think there is a broader piece of work to do here to say, how should we be thinking that retail investors can kind of get access to Bitcoin across a range of different things? Because you want people to be able to access this for, a short-term investment, a medium-term investment for their pension in kind of 30, 40 years time. What does that kind of look like? What do we need? What's the regulation that we need around that, if we need any regulation around that, and then what are the products that should be used for that? So, this is an incredibly exciting time for this in the UK. I think there's lots of opportunity here, and it's just working through all of that and making sure that we've got the kind of balance right, and we are providing, I think, for me at least, the most efficient way in which retail investors can access this if they want. And some people won't want to do that, but I think we should be making this as easy as possible, but with the right kind of protections around there to make sure people are understanding what they're getting into.
Yeah, that's a good point. Because I didn't clarify this, but it's retail investors that is banned out, and you were saying retail there. So that's an important point to be on. This ban is for retail, and that then shows that to me, it shows then the regulator is worried about the education piece, because if they're opening products up to professional investors and closing it off for retail, I could be wrong, please correct me. But there is an education piece there, because they're seeing sophisticated professional investors as ones understanding what they're going into.
Yeah, but I think there's not kind of a single answer here, right? There is that actually you might go to a financial advisor or a wealth manager, and they might allocate a portion of your portfolio to Bitcoin, right? So, there you've got the benefit of professional advice, because you've decided that's what I want. I'm not comfortable making this decision myself, I'm not comfortable understanding. So I've gone to an advisor or wealth manager, and I've done that. Other investors will be very comfortable in making that assessment themselves. They'll have the time, the capability, the experience, whatever it may be, to kind of, I want to do this, myself. I understand the risks involved in this. And so that's why I kind of, I don't think we should be looking at this like narrowly on, it's just a spot Bitcoin ETF or just an Ethereum. They are going to be two components of a wider kind of discussion here about what should the opportunities be for retail investors to do this themselves, to do this with wealth managers, with an advisor, etc. That's the kind of piece of work I think that the FCA should be thinking about. And who knows, there might be an innovative solution we haven't even thought about here that kind of emerges from that kind of policy work. In the US, it's a bit different, because you do have more institutional money in ETFs. You do have more of a culture of investment. You've got things like 401k, you've got IRAs, you've got all of those kind of, these have been going for 40, 50, if not even 60 years, these products. So they're well understood. And I just think we want to be providing those opportunities to UK investors to use products like this, to get exposed to Bitcoin like this, but kind of across the piece, to suit their needs, and also, where they are in terms of understanding and how they're going to use this as part of broader wealth management and sort of portfolio strategy.
Do you think we'll follow the US in whatever direction they're going? I know that it's been said before that we'll follow somewhat of the direction of the US. But traditionally what I see is like the US make a move, and then in the UK, it lags behind by a number of years. Do you think that will be very similar? The question I'm asking is, do you think the regulator are looking over the pond to?
They are.
Okay.
They are absolutely. Look, I mean, Genius Act. It was a big step, big initial move in the US. I think the bigger one is the market structure bill, so clarity, and sort of that developing. Undoubtedly, the FCA and the Bank of England will have been looking at that. Well, they have. There's been speeches actually even in the last few weeks suggesting that. So absolutely, they're looking at what's happening in the US. They've been looking at what's happening in the EU with the MiCA regulation, and actually in other parts of the world, to try and kind of calibrate. What does the UK want to be? Where does it want to play in this space? How's the maturity of the market compared to, let's say, other parts of the world? So 100%, and that is only a good thing that we are, benchmarking and looking at across the different frameworks.
And so, if you were a little bit of a fun question, if you were,
these have all been fun.
They have all been fun. Sorry. But thinking, if you were inside the FCA today, what would be the thing that you would be pushing for? And like behind closed doors, what would you do when it comes to the whole space in general?
So I definitely keep the momentum up. We've got some really interesting policy being thought about here. To a good direction of travel. Crypto ETN is a great example of that, right? So let's keep the momentum going. Let's look at what other jurisdictions are doing. There's lots of lessons to learn there. And I'm sure the UK answer will be nothing like any of those individually, but it's going to be, let's take some learning from them. What's gone well? What hasn't gone well? There's lots of examples of both of those around the world. And then the thing I'm really arguing is the thing we were talking about before, which is kind of thinking through how UK retail investors want to use Bitcoin, want to get access to it, not thinking narrowly, but thinking holistically. What's the investment landscape look like here? What are the products like ETFs that can provide that access? And how, what are the other different ways in which we can be thinking about this? And then the other big one, which we haven't kind of really dug into, is DeFi. We really need to think carefully about how the kind of current regulatory model works for DeFi. It's different, right? There's not a centralized actor in the way that we're having in TradFi. And so we need to think differently about what are the risks from that, but also what are the potential benefits as well? Because that's the real kind of power here in terms of, how do we rewire the financial system in a digital age for people that want to do things like self-custody. They want to use DEXs. They want to be able to use all of those really interesting kind of parts of this space that just don't exist in the TradFi space. So I'd be arguing very strongly there. Let's take some time. Let's be sensitive about that. Let's try and allow that innovation and not stifle it through just, picking up the TradFi answer and just applying it to DeFi and to the Bitcoin space.
Yeah, no, that's 100%. Like, that's what I kind of want to see is like more, just being open to these things and like moving with the times is what I'm kind of getting at. And like, it's a big thing because like we are rewiring how we interact day to day with money. The whole financial system is massively changing, and it's an exciting time.
Incredible. We don't. What's even more exciting is we don't know the answer. But we don't know what this looks like in 5 years' time or 10 years' time, and that's the exciting part. Is kind of thinking through where we want to get to, what is the potential here, and then kind of working back. What's the regulation need to look like now to achieve that in 5 years' time, 10 years' time, whatever it may be.
Awesome. Right. Is there anything that I haven't covered off? Or have I've not, I hope I've asked like the right kind of questions, and I wanted to cover as much as we possibly could in this. Is there anything that I've missed that you think that we should be diving into?
I don't think so. These have been like the spot on questions really in terms of like, what do we need to think about now? And hopefully it's been helpful in terms of how the FCA is thinking about some of these things. I think the kind of message I'd leave you with, really, not trying to defend or justify the FCA's actions in any way, because regulation is pretty, divisive. You either like it or you hate it. There's kind of push and pulls on them as a regulator, and they're not a machine. This is a group of people that are doing a job, trying to, I think, to get to a particular kind of outcome, and anything that any of your audience can do, or any of us can do, to kind of, support the FCA in understanding where they want to try and get to, how regulation is going to impact this space, I think is surely the right answer for us to carry on doing. And they're open to that, right? That might not always come across, maybe, or people might perceive them not to be, but they want to. I genuinely think they want to do a good job. They want to get to the right place, and they want to write rules that achieve kind of the outcomes that that they're seeking. And so it's for us to try and support and influence all of that.
Yeah, and it still feels from the outside that it's hard to communicate with the regulator. And yeah, that's something I would happily want to help and educate around. Well, my big point is around the Bitcoin and crypto. I want to make sure that there's a distinction there between that. But I want to be able to engage more with the regulator. I'm not saying that you can do anything here, but as someone in the industry and has been in for years and know people that are also in the industry, I would love to be able to actually have conversations and have more input to the regulator, because it's hard being in the industry and seeing all the bans that we've got and the restrictions, and there is an education gap or an education piece I feel that's maybe missing. So yeah, this is me just ranting now. I would like to see that. I'm not expecting you to have an answer to that, but I would like to see more communication. And it's when I had Peter Lane on, he was saying how much he engages with the Guernsey regulator and being invited in, and actually they will come to different conferences that he's going to, and we put on conferences in the UK. I would love that for them to come and learn and see what the space is like. But I currently don't see that at the moment. But that's me just ranting. That's my rant over.
Yeah, I think there's a kind of process here, that's gone through. I think what you're describing is you're seeing the end result of a process and not perhaps the process sort of in train there.
Yeah.
But I've seen the FCA at lots of conferences and events that I've been to, and they're kind of sitting there. They're often for the whole day. They might be on a panel or whatever, but that is all kind of, part of the, I think the way in which they're learning and understanding and thinking through some of these, these policy outcomes. The challenge for them really is, some of this is quite market sensitive as well, right? If they're thinking about doing something, they can't just sort of come out halfway through their process and say, well, we're thinking about doing this. We might do this. We might do that, because you can kind of, move markets with that kind of thing. So that's also a bit of a constraint in kind of completing the process, I think, a bit. And then that's why we have things like consultation papers and the like. What's interesting is the FCA is really trying to move away from just the consultation paper process. We're going to publish 50 pages with 10 questions and everybody submit, their answers, and trying to engage a bit more proactively, as we talked about, kind of throughout the process, so that what you get in the consultation paper, hopefully, is a bit more formed in terms of a proposal. And then you can really directly say, well, actually, I don't think that will work for these reasons, or I don't think this is going to achieve, these outcomes. You might say, we disagree with the outcome you're trying to get to. I mean, you should feel free to do that kind of as well. But it's even more important that, the FCA doesn't think what they've published is going to get to a particular place if everybody in the industry doesn't think that. They need to know about that, and then they can make that decision as to whether they want to carry on or actually whether they want to make a change. And we do see them making, changes. Digital Pound is a great example of that. Off the back of kind of industry feedback and, people in this space saying, actually, in 5 years' time, what you're proposing just won't work for the following kind of reasons.
Yeah, I'd love to be able to see that, and it'd be nice to have the interaction throughout the consultation, not just at the end. And that would be very nice to see. So if anyone is listening and can do anything, and if you can do anything, that's. But no, Giles, honestly, thank you so much for coming on. And these are the burning questions I think a lot of people have that are interested in this side of things, because you've got Bitcoiners that maybe don't have money tied up in SIPs and their pensions and stuff. So they're happy with cold storage, and that's important. That's a vital element of this, but also this is so important to understand this side of things as well. So yeah, honestly, thank you so much for coming on.